I think the Fed is making a mistake. They're so tight. I think the Fed has gone crazy. So you could say that, well, that's a lot of safety, actually, and it is a lot of safety, and it gives you a lot of margin. But I think the Fed has gone crazy.
There you have it. That was right at the top of our show. President Trump sharing his opinion on the Federal Reserve and just what an aggressive Fed means. Going crazy, wrecking the economy, wrecking his achievement, what he's put together, and hurting the stock market in the process. Now to discuss, David Nelson, Belpointe Asset Management's chief strategist. Melissa Armo is back with us. David, of course we know President Trump, just very reluctant to see the Fed move in there. No president likes to see the Fed hike rates. And I think in this particular case, what worries me is that it feels like almost every time Main Street starts to make a little bit of cash, that's when the Fed wants to take away the punch bowl.
Look, Trump is not alone with this, but beware here. The only thing worse than an independent Fed is a politicized one. So it kind of blocks them into a corner there. And I think, Powell is pretty pragmatic. If he sees that this is actually starting to slow down the economy or could possibly be worse than this, he'll take a pause. He'll take a break right now. But I think I agree with that. I think they're moving just a little bit too fast right now.
No, what I will say is I don't think the Fed is going crazy. I think Wall Street's anticipation of the Fed's next move is what's crazy. And I don't know why Wall Street is so convinced that Jay Powell is going to wreck this thing. Everything he has said thus far, particularly out in Wyoming, has signaled to me that, hey, I understand. I'm not one of these guys who's, just looking at spreadsheets. I've lived the world. I was Rick Carlisle. I'm not a classically trained economist. I understand Main Street. The message I hear from Chairman Powell is that I have to raise rates at certain times, but I'm not going to kill this thing if I don't have to.
But then almost every time he says that, he also is hinting at the economy overheating. So that's why Trump keeps making these comments after it. So, yeah, he will say that, and then right at the end, boom, he'll say something else to contradict that. So I think it's very hard to read.
Did any one of you were you uncomfortable after the Fed meeting, the FOMC, with the so-called dot plot? So, but we had apparently one rate hike in December, 3 next year, 1 in 2020. Is that okay? I mean, is that too much?
Not okay for me. I actually came away with 4 next year. I thought after those comments that we would have 1 every quarter. And I guess the fear that investors have is that the Fed is 1 step away from a policy mistake. And frankly, history is
That's a legitimate fear.
That's a legitimate fear because history kind of bears that out. We've had a lot of market corrections and bear markets caused by the Fed.
And to President Trump's point, it's a legitimate fear for the president to have. You can't go through all of this work. You can't lower these regulations. You can't put in these tax policies. You can't ignite the animal spirits that we're missing in this economy and then have the Federal Reserve snuff it out.
That's right, because don't forget, the Trump administration had their savings to help people, okay? So people out there, regular people, most people have credit cards, mortgages, some kind of loan where it's tied into an interest rate that may not be fixed. So when interest rates go up, that affects people. So for some people, the savings were great with the tax cuts. For some people, they were not as big as others. And so if you have a bump in interest rates that will take away the savings for that, going into 2019, that's what's upsetting Trump. And I think that is what's not going to be good for consumers. So it's a very fine line.
By the same token, rates are relatively low. Yeah, the yields are relatively low on the 10-year. Historically speaking, these aren't levels that have generally derailed economies or stock market rallies.
I don't think so. I think I started in the 90s. We were a lot higher than this, obviously. I think the problem for the Fed is the tools they use. They're blunt instruments, and they're trying to move around a battleship. Very difficult. And what Fed officials have to do is kind of think in advance here. I think they're pushing on a string here. I think the markets are going to tell them, slow down. Take a breath. You don't have to snuff this out.
Which is exactly what happened to Janet Yellen the first time she hiked rates in late December of 2016, right?
Walk it back.
She did it for no other reason except to express independence from Wall Street. They showed her what they could do. The market sold off the first 2 weeks. It was a disaster. I mean, 2016, a disaster those first 2 weeks. After that, she was she seemed to be more thoughtful or mindful.
Listen, I'm feeling very positive because we're going to earnings season. I'd have a different outlook maybe of a sell-off today if it was December 15th, but it's not. It's the middle of October. We got tech reporting at the end of this month, beginning of November. It's a busy, volatile, momentum time in the market. And remember, Black Friday, all these things coming up at the end of the year is a good time for retail. I don't feel like today's sell-off is any reason to get crazy.
All right, you ready to buy something soon? Come on.
I'll let you know when.
All right, well, I'm getting ready too. I'm getting my list ready, folks. All right, thank you both very much.